The first half of 2025 is in the books, and after outperforming the market by about 12 percentage points in 2024, things are going even better in 2025 for the asymmetric portfolio. The portfolio is up a whopping 34.2% compared to just 5.4% for the S&P 500. Now, today I wanted to go through three trends that I'm noticing from the stocks that I'm investing in and the market overall in the first half of the year, and then three things that I'm looking for in the second half of the year. If you're interested in what I'm buying in that asymmetric portfolio, there's a link on the screen and a link in the show notes to the Asymmetric Investing newsletter. That's where I alert investors of everything that I'm buying. I buy stocks once a month. My intention is to hold them for a very long time, and I'm looking for stocks with 10x opportunity over 10 years. I'm not day trading. I'm typically holding these stocks for years. In fact, some of the stocks driving the portfolio this year, I have held for multiple years. I have held since the beginning of the asymmetric portfolio. And as you would expect with an asymmetric portfolio, it's the huge winners that are driving the outperformance of the portfolio. There are two stocks that are up over 400% since I did spotlight articles and started adding them to the portfolio. 5 out of 21 stocks are up over 100%. So absolutely subscribe here on YouTube. But if you want updates on that portfolio, including my recap of the first half of this year, and everything that I'm buying in July, sign up on Asymmetric Investing. There's a free version, and then you get access to the portfolio with the premium version. But let's go through the three trends that I am really considering when I look at what I want to buy and where the market's going in the second half of the year. The first thing that it's really hard to get around is that multiple expansion has really driven a lot of the best performing stocks in the market this year. That's always going to be the case. But we are seeing that speculation is driving a lot of the market right now. It's not unusual to find a price to sales multiple in excess of 20. There are even high profile stocks that are in excess of 100 times their sales. That is a crazy multiple to pay for any company. So this is why we want to buy stocks that are relatively inexpensive, where multiple expansion can be a tailwind instead of a headwind. It's also why a lot of the stocks that I'm buying right now are a little bit more cautious than they were a year or two ago. Those multiples can't keep going up forever. So I don't want to buy stocks that are trading for a price to sales multiple over 20. But if a stock that I buy at 5 times sales goes to 20 times sales, like Robinhood has, for example, I'm happy to keep holding that stock in my portfolio. That gets to the second thing. There are a lot of companies on the market today that are performing absolutely phenomenally right now. Robinhood is a perfect example of that. That's one of the biggest positions in the asymmetric portfolio. Hims and Hers is another one. Their most recent quarter, they're growing at over 100% per year. It's hard to grow any company at 100% per year, but this is a publicly traded company still trading for just 6 times sales, and it's growing that fast. So if that fundamental performance continues to get better, the stock is going to go up not only because of their own growth, but also because of multiple expansion, which I mentioned earlier. Coinbase is another example, a stock that I was buying in the 60s. And now we've got phenomenal tailwinds behind Coinbase. There was the huge run up in Coinbase stock and crypto in general late in 2024. But in 2025, we've actually gotten a little bit more regulatory clarity, and we're seeing a lot more utility, a lot more stablecoin usage. All of those things are going to drive Coinbase's fundamentals and ultimately the company's stock performance, which again is another one of the phenomenal performers in the asymmetric portfolio. Now, on the downside, one of the things that you can't overlook is that value is vastly underperforming the market. There are a ton of profitable companies that are buying back shares at a rapid rate, and they just can't get any credit from the market. That's actually where I'm seeing a lot of opportunities right now. So a stock like Alphabet trades for less than 20 times earnings. Just a phenomenal value for one of the best companies in the world. You get search, you get YouTube, where you're watching this today. You get Google Cloud, which is growing at 30% compound annual basis. And oh, by the way, you get Waymo, which is reportedly doing 700,000 fully autonomous rides a week just in the state of California. Then there's a company like MGM Resorts, who is buying about 15% of its shares back each year, and the stock isn't going anywhere. Eventually, I'm just going to be the last shareholder left standing. Even Airbnb, another solid growth company. Maybe it isn't growing as much as investors hoped, but it's a solid growth company generating positive free cash flow, a lot of optionality for the future, and the stock just continues to tank. So those value opportunities are eventually going to pay off for investors, but that may take a little bit more patience while we have this speculative mania going on in certain segments of the market. Those are the big trends that I've seen in the first half of the year. So I'm getting a little bit more cautious as some of the more speculative stocks, some of the higher growth stocks that I own have done phenomenally well. But we are starting to see those frothy areas in the market emerge as well. So what am I betting on in the second half of the year? Autonomous driving, I think, is going to be a massive topic. And the winners are not going to be the companies that most people in the media are talking about. Tesla, yes, they have a few vehicles driving around Austin, but if you look around, you can find plenty of examples of those vehicles, even in a very small geo-fenced area, performing very poorly, driving over curbs, sudden braking. We haven't seen any accidents yet, but Tesla is not performing in a way that you would expect that they're going to be able to roll this out to millions of vehicles as they've been discussing for over a decade now. So the opportunities on autonomous driving are hidden more under the surface. That's one that I'm covering very often on Asymmetric Investing. So I'm not going to give away all of the stocks that I own here, but I think there's some phenomenal 10x plus opportunities in that market. I also think there's going to be a shift away from speculation to fundamentals in the second half of the year, especially if the economy starts to weaken. Now paying 20 times sales is going to be crazy for investors. So I'm looking to buy stocks that are value, companies that can buy back their own shares if the market just gives up on the stock. And I'm even looking at potential short positions. I did a special situation, as I called it earlier this year, when I actually shorted Tesla stock. And that position actually gained 260% in just a couple of months. So it was a really nice hedge for the portfolio. And that's something I'm considering doing again in the second half of the year. So I haven't done that yet, but look for that if you are a premium subscriber to Asymmetric Investing. I'm also looking at the artificial intelligence bubble potentially popping. And there are some interesting signs going on right now. One is that xAI, the company that is run by Elon Musk, wanted to raise $20 billion in equity just about a month ago. But they recently raised debt because they couldn't get buyers for their equity. And that debt came with a very, very high cost of about a 12.5% interest payment. OpenAI is losing key staff, particularly to Meta platforms. Acquihires are happening more and more as startups look for exits. It's becoming harder to raise funds, especially these multi-billion-dollar businesses. And oh, by the way, most of these companies aren't making money today. Eventually, that's the bottom line. The companies investing tens of billions of dollars into artificial intelligence are going to eventually need to make money. And I think we're reaching the point where investors are going to demand seeing those profits. And when we reach that point, that's typically when bubbles start to pop. So look for that in the second half of 2025. Again, all of this is pointing to you want to look for good values in the market and not just play a speculative game. That's what I'm doing with the Asymmetric portfolio. So if you like my content here on YouTube, if you're intrigued by the performance that I put up, and if you want to follow the Asymmetric portfolio, and the way that portfolio works is I buy stocks once a month. I email all of my premium subscribers every stock that I'm going to buy before I buy it. And then I track the performance of that portfolio over years. The Asymmetric portfolio is more than 2 years old now. I'm going to be doing this hopefully for decades. I'd love to have you join that community, and let's continue beating the market in 2025. Let me know what winners you have in your portfolio. Love to hear from you. Leave those comments in the comment section below, and we'll see you on Asymmetric Investing. Thanks for watching. See you here next time.